Bitcoin spent the week trading inside a macro tightening window. CPI, the monthly inflation report that shows how hot or cool prices are running, is coming. FOMC, the Federal Reserve meeting where they set rates and update the dot plot, is also coming. And the market is already reacting before the numbers even hit. This entire week has been about positioning ahead of those two events. This was a week where the headlines didn't tell the full story. ETF flows bled more than $1.7 billion, rate hike odds jumped after strong jobs data, and Bitcoin dropped into the low 60s on geopolitical tension and a liquidity pullback. But underneath all of that, the market was quietly repositioning. Bitcoin's structure this week was defined by three things: a clean rejection from the mid-range, a quiet liquidity sweep into the low 60s, and a mechanical bounce driven by a $320 million short squeeze. None of this was trend-setting, but it was all positioning ahead of CPI and FOMC. If you're tracking structure, this was a compression week. Flows told the real story. Spot Bitcoin ETFs saw $1.7 billion in outflows, the largest weekly bleed since February. BlackRock led with more than $1 billion in redemptions. Rate hike odds moved higher after strong jobs data, which tightened liquidity across the board. And geopolitical tension added another layer of risk-off behavior. But even with all that, the short side got crowded enough to trigger a $320 million squeeze. This was a week where flows were defensive and not directional. Institutions continued expanding collateral use cases even while ETFs saw outflows. ETF flows show sentiment, collateral markets show adoption, and right now, adoption is still moving forward. Banks and funds are treating Bitcoin less like a trade and more like an asset they can use inside their existing systems. Sentiment this week was driven by macro. Funding stayed neutral to slightly negative. Open interest reset. Miners accumulated into weakness, and retail stayed quiet. This is the kind of sentiment profile you see right before a macro print. Everything now comes down to CPI and FOMC. If CPI cools, Bitcoin gets breathing room. If CPI stays hot, rate hike odds rise and liquidity tightens. FOMC will confirm whether the Fed is leaning towards cuts, holding, or tightening. Bitcoin's next major move will come from these two events, not from anything that happened this week. This was the positioning week, and next week you'll see the reaction. So if you want a clean framework for reading weeks like these without getting lost in the noise, it's exactly why I wrote Understanding Crypto. It shows you how structure, flows, and sentiment fit together, so you can read the market the same way institutions do. And please follow me for full breakdowns and tell me what stood out to you this week. Your take helps shape what I cover next, so stay locked.